All right, let's jump right in. The crypto market has been feeling pretty heavy lately. And really, the big question on everyone's mind is, are we at the bottom? Well, today, we're going to put on our detective hats and investigate three crucial clues from the Bitcoin market that might just give us an answer. So here it is. This is the central mystery we're trying to solve. After a pretty significant drop, are we getting close to a turning point, or is there more pain ahead? The data might just hold the key. And just to set the stage, here's where we stand right now. Bitcoin is currently trading down 26% from its all-time high. Now that's a serious pullback, and it's exactly why this investigation is so important right now. So let's get to our first piece of evidence. Our first clue is all about how sellers are behaving. Look, in any downturn, you expect people to sell, of course. But it's the way they're selling, the sheer intensity of it, that can tell us a whole lot about where we might be in this cycle.
And whoa, what an intense number this is. The net taker volume is sitting at negative 53 million. Now, that number represents a really powerful force in the market. So let's actually break down what it means. So you can think of the net taker volume metric as a sort of tug of war, right? On one side, you've got the aggressive buyers, the takers, who are willing to buy at whatever the current market price is. And on the other, you have the aggressive sellers. A big negative number like the one we just saw, that means the sellers are pulling way harder on that rope right now.
And that's really the bottom line here. This isn't just some casual, everyday selling. Nope. This is aggressive, get me out now selling pressure. And what's interesting is that historically, these extreme spikes in selling often happen right before the sellers just run out of steam. It's the kind of intensity that can really trigger some panic. Okay, so we've established that sellers are in total overdrive, but that's only one side of the story, isn't it? Let's move on to our second clue and see what the buyers might be up to, or maybe more importantly, what they could be up to. Now, this number here is 26. This is the current RSI, that's the relative strength index, of something called the Stablecoin Supply Ratio. This indicator is absolutely fascinating because a level this low has, in the past, been a really strong signal for potential market bottoms. Let's dig into why.
So the SSR is a pretty clever way to measure potential buying pressure. What it does is it looks at all the stable coins out there, which are basically digital dollars, just cash sitting on the sidelines, and it compares that pile of cash to the total value of Bitcoin.
This slide really breaks it down nicely. On one side, you've got that total supply of stablecoins. Think of it as cash, ready to be deployed. On the other side, you have Bitcoin's total value, the asset that all that cash could potentially buy. Now, when that ratio gets really low, it means something powerful is happening.
It means the amount of potential buying power is just huge compared to the current size of the market. It's like having a ton of dry powder ready to go. This is such a strong bottom signal because it tells us the market is primed with purchasing power. Any little shift in sentiment has this massive amount of capital just waiting to jump in, creating the potential for a very, very sharp reversal. This brings us to our third and final clue. And this one is all about human psychology. It's about that moment of peak fear when a certain group of investors finally just throws in the towel. We call this capitulation. And get this, in just the last few days, a staggering 60,000 Bitcoin were sent to exchanges at a loss by a group we call short-term holders. Now, these are usually newer folks in the market, people who likely bought in more recently and at much higher prices. And that, right there, is capitulation. It's that moment of maximum pain, when people who just bought in can't take the pressure anymore, and they just sell, locking in those losses. This isn't just data on a chart. This is pure panic. It's a surrender. What's more, as you can see here, this isn't some isolated event. We saw a similar spike just a few days ago on November 15th. Seeing these moments of peak panic happen back-to-back like this, well, that's a very strong signal that sellers are really reaching a point of exhaustion. So the crucial takeaway is that this type of behavior, this peak surrender, is often exactly what's needed to wash out the last of the panicked sellers before the market can really find some solid ground to stand on. All right, we've looked at three very different clues, right? We've got seller aggression, we've got sideline buying power, and we've got investor psychology. So what does it all mean when you put it together? Let's just do a quick recap. First, we have these incredibly aggressive sellers, a force that often burns itself out.
Second, there's a massive amount of buying power just sitting there, waiting on the sidelines. And third, we're seeing peak panic and surrender from newer investors. And you see, these aren't three separate things. They're all connected. The aggressive selling causes the surrender, and all the while, that sideline cash becomes more and more powerful as the price falls. Together, they tell a really compelling story.
And this, right here, this is the heart of it. Markets are always searching for balance. When one side, in this case the sellers, gets way too extreme, they eventually just run out of ammo. And that's the moment when the buyers, who've been patiently waiting with all that cash, can finally step in and bring things back to equilibrium. And that moment, that rebalancing act, it's almost never quiet. It's often the exact inflection point where the market's trend makes a huge shift, or at the very least, a powerful bounce. The real question is, are we there now?
Look, while nobody can predict the future with 100% certainty, the evidence we've looked at is pretty powerful. You've got the push of extreme selling, the pull of massive potential buying power, and that psychological breaking point of investor surrender, all happening at the same time. These three clues are definitely flashing signals that the moment of rebalancing could be very, very close. So the only question left is this the turning point?